also have a look at hog markets this week with Iowa State Extension livestock economist Schulz. The USDA's quarterly hogs and pigs report tallied nearly 68 million head of hogs and pigs on March 1st. That's up slightly from a year ago, but down 1% from last quarter. Iowa, which accounts for nearly 30% of the country's herd, recorded a 3% drop from March 2015, but Nebraska's inventory was 6% higher than a year ago and 2% above December. We talked with Lee Wednesday afternoon and started by asking for his thoughts on the USDA's estimates.
I didn't think the report came in too much of a surprise. It was, for the most part, within pre-report expectations. If you look at the big three, maybe a slight surprise when you look at the breeding herd. Analysts expected it up about 0.6%. It really came in with right exactly with year-ago levels. I think coming in the report, we thought we could have seen a little bit more expansion in that breeding herd just due to some of the sow slaughter data that we had seen and gilt slaughter data. But again, I think really in the realm of pre-report expectations.
Does this report show that expansion has ended?
Well, I think it's important to take it in the context of what the numbers are. We are dealing with large inventories. If you look at the all hogs and pigs or the market hog inventory, it is a record level for March. And so really, I think we're seeing a little bit of a stabilization in those supplies. I think if we look at it in the context of expansion, maybe a little bit of a constrained expansion, a little bit calculated, as we know we are going to increase those supplies moving forward, and maybe not outsupplying the market really in the current context.
From that pig crop estimate, what do you think prices will do here for the rest of 2016?
Well, I think if you look at the market hog inventories, and so ranging from under 50 pounds to 180 plus, and take that for what the supplies are looking at, I think as we go into spring and summer, maybe a slight increase in slaughter supplies. And then when we look into July and early August, I think we could see maybe a slight dip in slaughter year over year. As far as prices right now, if we're looking at the futures market, we're right in a range for the second quarter of 72 to 76, third quarter 73 to 77, fourth quarter 62 to 66, and then about 61 to 65 for the first quarter of 2016. I think when we really look at those prices, really the fourth quarter and maybe somewhat of the third quarter, I think are very priced very well, given maybe expectations of what supplies could be.
How does that affect margins per head?
Well, if we look at our Iowa State model and those margins, the first quarter here in 2016, really we're about break-even levels. As we get into the summer months and those higher seasonal prices, looking in the range of about $24 per head returns. And then as we get into the fourth quarter, right now, using those futures prices, we're right around $2 a head profit. And then into 2017, that first quarter, I think it's going to be really a replay as we look at the first quarter of 2016, right about at those break-even levels. If we're looking at a 2016 cost of production level, I think we're right around in that $63 to $64 on a hundredweight basis for farrow to finish.
To close out with, Lee, let's talk about imports, specifically the implications of Canadian feeder pig imports into the U.S.
Well, when you look at Canadian feeder pigs or even market hogs, they really work hand in glove of impacting our production here in the U.S. and have implications for prices. When we look at the recent trend in feeder pig imports, we see in comparing 2014 to 2015, we increased about 400,000 head. That's about one day of slaughter. So not large implications at this point, but when supplies are rather large, it can have some implications. As we fast forward and look at so far through mid-March, we've increased those about 100,000 head over the levels we've seen through mid-March and early 2015. So the trend is really towards really increasing those feeder pig imports into the United States. And there's a lot of reasons why that's occurring. We are seeing profitable levels, low feed prices, rather supportive lean hog prices, so that is drawing some of those feeder pigs into the U.S. Also, the exchange rate is very favorable and has incentives for Canadian producers to have those pigs cross the border. And also, I think it's important that the Canadian herd is growing. And so they have more available supplies. So I think the really supply-demand fundamentals are there for at least this year and into next year to see those feeder pig imports ramp up.
The USDA will release pork trade data for February on Wednesday. The next quarterly inventory report is scheduled for June 24th.